what would like the perfect exit look like in one of their favorite investments?
Well, so my answer will probably disappoint a lot of people. My favorite investment is Bitcoin, and I don't trade it. I purchased Bitcoin with the intent to hold it forever. Hopefully, maybe in the future, borrow against it if I need liquidity. Yeah, I don't trade, and I don't trade because I think that you can go to a casino and do really, really well. And you get that adrenaline rush and you get a little too confident and over your skis, and all of a sudden you lose everything. And for me, I don't come from a background of wealth and status. I've really worked hard for everything I've earned and I want to keep it. So I'm extremely conservative. I'm extremely averse to taking big gambles. I don't want to trade in and out of things. I just want something really simple, to be honest with you. And I think a lot of people are looking for something simple where you can't, it should be in theory cash, right? Like you earn it, you just put it in the bank, maybe earn some interest on it, but you can't because the rate at which they're inflating it is just going to eat into your cash very, very quickly. So you have to put it to work or you have to, invest it in these scarce assets we've been talking about. And really the best one I see is Bitcoin. What asset would you buy today that you plan to hold for 100 years?
I would say precious metals, and that's the only one that I actually have and hold is I hold physical. I don't buy ETFs or anything, so that is the one that I do accumulate every year. I keep holding it. I don't plan on selling it. That's the only thing other than like buying yeah, right now, no, that's it. Is I hold precious metals. I believe it's yeah, I believe that is the lowest volatility, uh, highest probability of higher pricing that fits my risk style, right? So I want to ask a Tesla question.
Okay.
So I recently saw Elon talking about how Tesla wants to get into doing these robots and how they think there's a billion, robot market a year. Everybody has their own personal robot. Um, I guess my question would be, is Tesla a buy at this stage for insane growth if they haven't even really started the robot phase and they're about to like explode it up? Um, to me, it's interesting. I like the idea that if Tesla's getting into that, and they probably, I don't follow it. I'm not, I'm not a brand person. Like I don't follow Tesla or Apple or any of that stuff, but it'd be interesting to see, is Tesla going to hold its ground, and is AI in the robot space going to send their stock, into orbit even more from where it is?
AI is going to be the largest theme in our generation. I think we're in 1985. I think NVIDIA is Intel in 1985. We have yet to see a true AI company. I think Tesla will be the true AI company.
Wow.
I think Tesla is positioned to implement all, taking, when you think about it, taking electrons and converting it into an intelligence for value. If there's a company that's going to do that, it's going to be Tesla. What facts do you have that support the thesis that interest rates are going to stay higher for longer and we are in a new high inflationary environment? What facts? Not beliefs, not feelings, not bias. What facts?
I don't think we're going to be higher for much longer. I guess it depends on your outlook here, because I think that right now the Fed is locked in a battle of trying to get inflation down. That remaining, the first 80% of disinflating from 9% inflation was easy, right? It's that remaining 20% that's proven really tough, right? So now it's in this battle of trying to pull that remaining 20% down to 2% where it wants it to be, right? I think the Fed's about to get an awful lot of help from the lag effect. And I think pretty soon the Fed is going to say, hey, wait a second, this economy is heading into recession. You know what? We're way too high on rates, and we got to really start cutting like crazy. If that starts happening this year, it might be like, okay, you know what? We've been telling everybody only one. Now we're going to start doing more. Or it's like, hey, 2025, we were thinking 3, maybe it's now more like 8, right? And if you look at past recessions, this is the playbook. If you look at the past recessions in basically our lifetimes, like a human lifespan from here, almost every one was preceded by the Fed hiking interest rates pretty dramatically, hanging out on a plateau for some period of time. And then right as the Fed starts to cut, that typically is when the recession starts. Now the start of the recession is determined after the effects. So it's not like people necessarily knew at that moment in time it was starting. But once the Fed starts to cut, you see the Fed just start like desperation cutting as the recession arrives, and just panicking, trying to re-stimulate the economy through interest rates cuts. And as I talked about earlier, usually in each of those recessions, the Fed is cutting through the first year or two, and you don't see the stimulative benefits, until after that, right? So I don't think history is going to be different this time, is what I'm saying. So yeah, I maybe for much of the rest of the year, I think it's going to be, feeling like it's locked in a battle with sticky inflation. I think very quickly it's going to say, whoa, you know what? I've been worried about inflation. My much bigger challenge here, I'm realizing, is deflation. Do you think we're going to have a recession in the next 12 months? And if not, what is going to keep us out of that?
So here is my opinion. I think we already went through or are in a recession. It is being hidden by nominal terms. So what they're doing is they're printing a bunch of money from a nominal perspective, print, fiscal spending. They are understating the inflation, and that money that they print goes into the top line of GDP calculations and the inflation on the bottom. So if you were to accurately record the inflation numbers, I think it would state that we are probably in a recession already. That's my guess. So we're already in a slowdown, like in terms of real GDP, not this nominal terms. I think everything is being hidden nominally. So what they're doing is they're destroying the dollar, understating inflation and overstating GDP. So I think that we already had a slowdown. The better question is, can we get out of it? And what does it look like? And what financial assets benefit from that? When they hold interest rates steady, and they print a bunch of money, money gets directed in a slow economy towards like tech stocks. During a strong economy, it generally goes towards commodities and stuff like that. And that generally occurs under a real estate boom. So we're probably in a slowdown already, could potentially be called a recession. The naming of it doesn't really matter. And I think we're in it and we're trying to come out of it. I think you can see that in the housing starts. You can see it in the slowdown in home sales. You can see it in all these different metrics. The unemployment rate, and we can do a quick unemployment rate here just to show you what that looks like. This is another thing that a lot of people use to gauge a potential recession, is the unemployment rate spikes higher, and we are coming up in unemployment rate. So I think the slowdown is there, and we could spike this upward, basically showing everyone that, yep, a slowdown is coming. And these are all slowdowns in the market. So it is definitely possible that a recession could be coming. And I'm not denying that it's not coming. And we may already be in it. We just don't know it yet. Because usually recessions aren't claimed till after they already have come. What are some investment traits that have made you the most amount of money? What have you changed in your investment approach and style that has made you the most amount of money? And then conversely, what are some things that prevented you from making money the most? Like, what are some bad habits or traits that you have gotten rid of to really push your returns?
Are you in the market for gold and silver? Then if so, please consider Miles Franklin. They are my gold and silver dealer of choice. So not only do they have super competitive prices that you're going to have a really hard time finding elsewhere, but then they also have top-notch customer support. I know Andy Schechtman, the owner of Miles Franklin, top-notch guy. I wouldn't be recommending them to you if I didn't have faith in their product mode. What you really want to do, however, you want to email them at info@milesfranklin.com, and you want to say that Capital Cosm sent me in the description line, because when you do that, you can get access to their special pricing sheet. You want to get that special pricing sheet because you're going to get special prices that you won't find on the website itself. So email them at info@milesfranklin.com. Tell them that Capital Cosm sent you, and you won't be heckled with spam emails, etc. There's no commitment necessary. I promise you that. And with that said, I will let you get back to the video.
So the best investments I've made, I guess it's sort of two things that tie directly into what I'm seeing right now as the best opportunities. So this sort of derating of companies where people sort of use heuristics to characterize businesses as sort of low quality when there's sort of more nuance and when it's maybe more of a macro thing that is inherently temporary. So like these mixed oil and gas producers where the gas prices fallen, so their margins fell, but it's not like their assets are worse. They just suffered from a short-term crash in natural gas prices and natural gas liquids prices. So I like those a lot. Again, people just sort of turn off their brains, and especially in this sort of passive flow and sort of quant-driven market, there's a really sort of clear path to re-rating on those sorts of things. And so that's sort of where I've done the best. I think the thing that I've done that's been not so great that I'm still working on, and it's been helpful to do less of it, but I probably need to do even less. I'll find companies that are great activist candidates and I'll buy the stock. And you can't actually do that unless you're actually going to change it, because even if you think, hey, it's going to do okay if I don't change it, there's a reality, which is that that it's an activist candidate for a reason. And so there's a couple of companies we're actively working on. And so I wouldn't categorize those as that, because we're in the process of talking to the board or talking to large shareholders or trying to figure out sort of like what to do exactly. So that those aren't in that category, I think, because we're actually like moving towards an outcome there. There's a couple others. There's one in particular that we own that we sold most of, but it would be a good activist candidate. There's another one that we own that, again, I'll sort of, I guess, suffer from this trap where it does seem to be working anyway, not the share price, but the business itself. And so there's some hesitation to make changes there. But owning something that is an activist candidate without actually pursuing activism is a giant mistake. And, we'll try not to make it. And, it's something that we've done a lot less in the last couple of years than we had done previously. And then I guess just like we have actually had success in activism. It's sort of weird. I was chairman of a public company in Canada for a year and a half, and it was part of the motivation to build a media following and social media following. Like people didn't really know about it. It had been $1 billion market cap company, and no one cared that I think I was 33 at the time, something like that became chairman of this company. Like no one cared. And we started mining Bitcoin using waste gas. Like we had natural gas we were losing money on. So I went up to Spring, Texas and bought some used Bitcoin miners and mailed them up to Calgary, and we plugged them in, and half the research analysts downgraded the stock or dropped coverage because they claimed they couldn't understand it. This one banker said, no one should do this, but if it's anyone, it shouldn't be them. And it was like, okay, well, that's wonderful. No coverage, no whatever. And we actually had a really positive result on that. We got a hostile bid after cleaning up the company, which is sort of we weren't looking to sell it right then, but the idea was, hey, it has this really great asset that's sort of people are confusing, sort of similar to this liquids rich gas sort of strategy now, where people look at these companies and they might have an oil field and a gas field, and each of those could be worth a lot more if it was its own company, but because they're combined, there's sort of this conglomerate significant discount. So there were some producing fields that were mediocre, and then there was this amazing field that was getting no value in the market. And so selling off the producing fields sort of cleaned it up. And there were two private equity-backed companies on either side that were acquisitive and backed by large firms that had a lot of money that were looking. It was sort of clear they wanted to own this asset. And so cleaning it up allowed us to get bought. And we ended up selling for a 75% premium to where we were trading, and at a 20% premium to where the stock was trading before I became chairman. And that was great because the average company in that same area, their public equity, the average stock of companies in that area was down about 50% in that time frame. And the average of companies of our size or smaller, those stocks were down an average of actually 70%. So, or 65, somewhere in that sort of like enormous down range. So we actually added a lot of value through that. And I'm very thankful we got involved there because there was a lot of risk that could have done as poorly as some of the comps, right? It could have been down another 70% instead of up 20%. And again, getting back to the mistakes we've made, one of the biggest ones is buying a stock that is an activist candidate and not trying to make changes. So trying to not do that again. It's a really good question. I think everyone has their sort of own faults and own issues in their processes. And that's been one for Bison. And it's something that we're working on, that we have a lot less exposure to than we did historically. And hopefully we'll resolve it partly through some of the activism we're working on right now, as well as through owning stocks of companies that are, our mantra when we were launching was survivable balance sheets, good assets, cash flowing assets, and good management teams. And so where you wave on one of those, you can get into trouble. And we do try to find those, and sometimes you get surprised to the downside by people or assets, or sometimes they choose to destroy their balance sheets. But I think it's important to sort of have that discipline and to be proactive one way or another on those sorts of companies.
Nice.
I'm interested in where other people are finding opportunity in the market. I think it's really interesting. I think it's a really helpful view into their view on the economy, their view on valuations, and their view on sort of where things are going rather than just sort of where they are.
Well, strange enough, I think silver. Okay. Silver is the most volatile metal by far, and sentiment affects it the most. There have been 60 billion ounces of silver produced, and people have been saying for 20 years that we're about to run out of silver. Now, while a lot of silver used to get recycled, a lot of silver doesn't get recycled anymore. One of these days, we're going to run short of silver, and silver really is going to go to the moon. I'm shocked that we've got $2,300 gold, $32 silver, because silver was $50.25 44 years ago. So I think the single best investment is silver. But if you're talking about shares, I think the junior resource market is the cheapest it's ever been in history. And if we can avoid blowing up the world, the junior resource market's going up 5 to 10-fold. Here's what I'm going to say. I'm not smart enough to go one-on-one with Doomberg. Doomberg is simply brilliant. And rather than me introduce something to confuse him, what I want him to do is to talk.
I would say that one of the things we need to do in the Western world is go back to basics and have a real understanding of the physics of energy. And the reason we need to do that is because our relative misunderstanding of the physics of energy have put much of the West in a geopolitical position of weakness. And military might is a derivative of industrial might, and industrial might is a derivative of getting energy policy correct. And the US has certainly done all right, but Europe in particular seems to have lost that lesson. And it's no coincidence, I think, that we're losing the war in Ukraine, in part because Europe is so weak, and Europe is weak because it has screwed up its energy policy. And so that's how I would answer his non-question. Do they see any path to peace in the war in Ukraine that does not involve direct kinetic conflict with NATO? Because if such a path exists, I'd be very interested to learn of it.
Then Trump said he could fix that in 24 hours.
Supposedly, yeah.
Look, it's crazy. There's wars all the time. we have like Lebanese heritage, like, you know, there've been wars all the time. Some wars nobody talks about. Uh, it just happens that that war, you know, it's super popular. Like it's been popularized. Like how long has that been? This war? 3 years now already?
The Ukraine war? Yeah. So it's about 2.5 years.
It's just terrible. Like all these wars. So I don't know if like what they're gonna do there. I don't want to like that that military complex thing there. Like there has to be some merit to that there. They want to sell those weapons, right? If I'd be selling weapons, I'd have an incentive for that
The
thing.
incentives are there, yeah.
Not to go crazy. You don't want it to end. You just want it
Keep the
to
flow.
last, right?
Yeah.
So
Keep the flow
you know
going.
what we should do? I should chart the average length of wars and see what's the mean because the Iraq war was like 10 years
Yeah.
more
So that
maybe.
was 2003 all the way out until it's really kind of hard to pinpoint an end to it.
Yeah, about 10 years, right? 10,
Yeah.
15. Afghanistan. So I'm wondering all these wars there, maybe they just have a shelf life of 10 years before, okay, that's done there. So now we're 3 years in. Maybe it's just gonna, but I don't know. I'm not into that dooms type of thing to think that everything has to scale out to World War III. I know it's selling a lot of books, a lot of views, end of the world. Like, we're gonna have a guest on again there this week. There, David Murrin. There, I don't know if you talked to him there. We're supposed to have him on this
What's his
week.
name?
He has the world, you know, the changing of the guard type of a
Mm.
theory there.
Oh,
Maybe
the
I'm gonna ask him that question there, what
Thucydides
he
trap? Is
thinks.
that what he's referring to?
The
Or
what?
turning? Thucydides
Yes.
trap? Yeah, something like that.
Yes. I'm sorry, David, there. We're gonna clarify if you watch this there, you could, but there's something about China and you know, it's like escalation and stuff like that. But
Mm.
I don't know. It's like, okay, let's look from a statistical probability ways. Most of the time, over the thousands of years we've been in existence or whatever, known history, there's less escalations to crazy stuff than there are, right?
Right.
So looking for always a third world war or a kaboom moment, those are outlier events. But for some reason, the outlier events is where the media spends most of its time, but they're low probability events. So I don't think like, you know, from a probabilistic way, you got to say that the odds are if this
Yeah,
thing just
it doesn't do you any good to think that way.
no, things have a tendency to resolve themselves. Like most of my worries, 90% of my worries have a tendency to never materialize, right? It's like whenever I feel stressed, I have a little cut. Oh, like, guys, I'm here. I'm 48 years old. I've been here all this time, and things have a tendency to continue. It's like the trend of a chart. They have a tendency to continue until they don't. But to expect something different, like to expect always a 2008 type of crisis, to always expect a 2001 day after day, it doesn't help you. It burns your emotional capital, and they're lower probability events. And look, if they're going to happen, it's just going to happen. But to always expect it to happen the next day, I'm pretty sure when Ukraine and Russia war started 3 years ago, I'm sure nuclear bomb callers they were calling it every single month, right? That'd be
Yeah,
something,
I remember.
right? So what's the use of that? Oh man, if you had to choose, I don't know if he does TA there, but if I told him that he could do fundamentals or TA, but he could not do both. He had to choose one. He had the opportunity to look at a chart or had the opportunity to never look at a chart. Okay, ask that one. If you had the
Okay.
opportunity to charts don't exist and charts existed, even if which one would he choose?
Well, I would use fundamental analysis because I think I understand it a little bit. And I certainly, I read what the technicians say, and I know a little bit about what they say and think, but I would use fundamental analysis rather than technical. And partly because usually when something starts changing dramatically, it's stuff we haven't thought of, and there aren't any charts, and much less fundamentals to rely on. But I would start with fundamental analysis. I don't know which currency I should move to, or we all should move to. Yes, I have a lot of US dollars for historic reasons. But in the next time around, will the US dollar be the place? If you'd asked me 100 years ago, we would have all said the pound sterling. And of course, that was exactly the wrong place to go. And so my question, and I own a lot of US dollars, and most people would say US dollar. Well, okay, yes, but what about next time? And I don't have that answer yet.
I have no clue. If I was to guess, I would say likely to be the yuan, the Chinese yuan. However, that's currently pegged to the US dollar. So I don't know how realistic that is. There would have to be a massive decoupling from that, which would cause Chinese goods to become more expensive, which would impact the competitiveness of their economy. So I don't know if that would be realistic to happen. Another one I will throw out there would be a cryptocurrency. I don't know if it would be Bitcoin or some other derivation thereof, but I do think, generally speaking, the idea that there was a currency out there that is essentially the currency of the internet versus the currency of a government, I think that generally speaking does have some broad appeal. I have no clue if that currency is going to be Bitcoin or one of the other bazillion coins that are out there, but I could see something like that coming along. However, I see no alternative to the US dollar anytime soon. I reserve the right to change my mind as the facts change out there in the world, but I think the US dollar is going to be the reserve currency of the world for many decades to come. What's your investing strategy and why?
So my investing strategy predominantly is to just use technical charts. And what I mean by that is we're talking cycle analysis, RSI divergences, trend lines, parallel channels we saw as well, wedge patterns. And the key is this, is that I've clearly learned that I'm a very poor stock picker when it comes to me just going with my personal emotion or what I think is going to happen. It's when I go to the charts that there's an unbiased view. A chart, when you look at a chart, it tells you a story. And it doesn't have an ulterior motive. There's no narrative it's trying to spin. It is what it is. And when I look at the charts and I truly follow the charts, I always do much, much better in trading, and I generally make money over time. And so I think that's the biggest thing, is that I use technical analysis because it shuts down my emotional side if I just focus on that, and I'll do very, very well. I would ask him to break down the underlying data, that the recent economic data, like for instance, we're getting the CPI on Thursday, and kind of go into what we're seeing with the underbelly of some of these numbers, where that, I don't know if he'll know this, but where inflation is still bubbling up. And again, we've seen commodity prices start to bounce recently. Oil, obviously, we just looked at that chart earlier, starting to come back up. But I would love to know his ultimate interpretation of the economy. And is it as rosy as it's made out to be in the mainstream media and in other places, or is it really starting on that path towards recession?
I think that the odds are more in favor of us moving closer to like a steep recession. However, you can always paper over that. Like it becomes like a game of measuring at the end of the day, like how you're measuring things. So when you look at like your own bills. I saw this video popped up on social media where a guy was on his his Instacart account, I think. And so he just scrolled through his history and he pulled up a grocery order from 2 years ago. It was 2022, I believe. And there's a button on there that just says resubmit the exact same order. So buy all the same items. And the original order was like $150. And when he hit like resubmit order, it just grabbed all those items again, but at the new prices, and it was like $470. So it was almost quadruple the price in like 4 years, which is like, I don't know the exact math on that. What is that? Like a little less than 25% per year because of compounding, like 20% a year, which is, at least for food, like obviously insanely higher than the amount that the CPI shows. Now there's other costs involved in that too. Maybe Instacart's fees went up. Maybe those specific brand names were more expensive, but there's the same item with a different brand that you could get for cheaper. Like, I don't know, but that's a really good rule of thumb for like what the quality of life is going through. Because it's like, if I get a ribeye every single Friday night, and it used to be, $20 and now it's $50. Yes, you could say that there's extenuating circumstances causing specifically ribeyes to get more expensive, but that's still a good measure of the quality of my life becoming more expensive. I have to get sacrifices in order to maintain.
Right.
And you might say, well, you shouldn't be buying ribeyes anyway. And it's like, well, we're measuring the quality of life here. And so we're not talking about good personal financial habits. And so for many people, that's what's been happening over the last 4 or 5 years. It's like you're getting raises, you're getting your, inflation raises, you're getting your promotions, and it's much harder to afford life now than it was 4 or 5 years ago, because everything you have to buy, like, the diapers and the groceries and the rent and the gas and the insurance, is all way more expensive, and it's gone up more than your wages have. Real wages have been on the decline for a couple of years now. And so that's the real measure of the quality of life going down. And that's just the official metrics. And so really, it's like, are we in a recession or are we not? It's like, well, officially, maybe not. And officially, we may never be. Like, there's ways to measure around that. I mean, the last time when it was like, hey, we have 2 consecutive quarters of GDP in decline in a row, they were just like, nope, not a recession. Like, doesn't count, because we just decide, when is a recession. It doesn't matter that that's how we used to always just classically define it. We're just, not using that definition now because of, the labor situation. And so you may agree with that or disagree with that, but the truth is, it's just a game of measuring. And so we really can't know, like, officially recession or not recession. I mean, if things get bad enough, we'll definitely know, right? But from everybody's own individual standpoint, it's a lot easier to measure. Is my quality of life getting better? Do I have more income relative to my expenses? Is my net worth growing relative to my expenses? Because if your net worth is growing along with your expenses, or your income is growing along with your expenses, then it doesn't really help. You're just keeping pace. And so is my quality of life actually improving, staying the same, or getting worse? And that's a lot easier to measure than looking outside. And I think for most people, they're in an individual recession for the last couple of years. Now there's ways you can just change that individually for yourself. Like, you can choose to do the things that will improve your life. But that doesn't mean that life isn't getting a lot harder for a lot of Americans over the last couple of years.